All right, finally, I'm going to do this one more time. Had a lot of interruptions, but this is going to be good. All right, now what happened here, you have this leg up. It climaxed right here. How do you know? You have heavy volume and you have a change of behavior. Remember, a lot of turning points happen like this. When they talk about climax and then what? That automatic rally is your change of behavior, is your sign of strength, the first one. The fact that it's the rally, if you take a look closely, that it's always a big rally and that's your change of whatever. So you have your climax and you have your automatic rally, which is actually a change of behavior. But the key is you have it at a resistance level. I'll show you over here on the higher brick size chart. You see this? You see this? That's an upthrust. In the upthrust, you had a turning point with a climax and your automatic rally or change of behavior. So this is a perfect trade. Why? Because this is called rejection. It's rejecting higher prices. So this is one type of turning point, which is either at spring and upthrust positions. Then it goes all the way down and you get your second type of turning point. Again, the turning point is still, over here you have your climax, right? And here you have a change of behavior and a higher high. But this one is at a higher low. It's still pulled back enough. It pulls back enough right here. But it's at a slightly higher low. So this is your pullback turning point. And you see a lot of these. You just have to know where to anticipate so that you have it in your mind. Okay, that's what it's going to do. That's where it's going to do it. So that's what happens. The key here is understanding that this move down is a sell to buy. How do you know other stocks? The stocks are not breaking. They're making a higher low. They're completely diverging. And even if you're you don't know, just wait for some confirmation, which comes here, and this big wave supported by 107 stocks. After that, what do you know? It's going to go back to test. Where is it going to test? Is it going to test a low? Is it going to test creek? Where is it going to or is it going to test the high volume bar brick? Those are three areas you want to look at: the low bar, the creek, and the high volume brick. This brick was bigger than the last 35 bricks in terms of volume. That's where it tested, and that's where it flowed. That was where the trade was, low risk trade could have been placed. The other one didn't really give a low risk trade, right? Because it just sold, give a one brick pullback, and then this bar, which is all pure selling, the biggest volume in 100 bricks, is going to push it all the way down. So it didn't give a pullback, Then if it doesn't give a pullback, does that mean, what do I do? No, you just wait for a rally and get in right there. Down, bang, tap. Anyway, so where was I? So this gave it here, and then it goes. All right. After that, where does it go? Oh yeah, okay. So it goes to the high bar. So typically, support and resistance. You could tap the high bar and the low bar. You could also penetrate them, and then it becomes a spring or an upthrust. Okay. So that's really it. So it tapped, sold, ding, 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 comes here, and buyers come in over here. Actually, they came in over here, but whatever. And this was the spring. And then it comes back up to resistance. All of a sudden, you see selling pressure here. And now here's the key, all right? And I'm going to explain other stuff. I'll go into a teaching mode in a minute. Right, so there's your resistance. Now let me explain to you something. When you have a brick or a bar or whatever, and it has high volume and it has no follow through and immediately falls back, that is a indication of distribution. Distribution is not just, okay, this is a fucking, what is that, the range at a high or a low. That's what they're teaching you online. They have no clue what they're doing. Distribution here can also be a high volume bar or brick that cannot hold, because distribution is done in that in that wave or around those bars. All right. So after that, it falls back and basically breaks. But this distribution is also a climax. Notice support, resistance, fake breakout, distribution into the breakout, or distribution into when others are buying. Others are buying, smart money is selling, high volume print exposes them with the biggest volume in at least 100 bricks. Why are they doing that? Because they know there are buyers there and they can offload their inventory. They can sell so others buy, and that's what's creating this high volume. Because buyers are there ready to buy, and sellers are smart money there. Anyway, after that, market goes down, right? And goes here. Now, I'm going to go into more of a teaching thing to explain how do you want to approach the market. So typically people, when they approach the market, they have, what's the first thing to do? Candle formations. What's the second thing to do? Price patterns. This is basically it, right? Candle formation, price pattern. But I want to show an alternative. The first thing is simple support and resistance. All right. And when you take a look at support and resistance, if you see it's going up, if the support and resistance levels are going up and the support and resistance levels are going down, that will tell you trend. So from support and resistance going higher or lower, you will naturally see trend. It's impossible for you not to see trend if support and resistance, the turning points here, the pivots, if they're going, generally they're going higher, right? You will see trend. The key here now is you will know support and resistance and you will know trend just from looking at higher support levels and all of that. Then the next step that you want to do is ask yourself, what do I look at support and resistance? And the answer is breakout, absorption, failure, absorption, and spring and upthrust. Okay, so first step is support and resistance. Second step is looking at what happens at support and resistance, which falls into 4 basic categories: breakout, failure, absorption, and springs and upthrust. From this, you'll be able to identify direction and analysis much easier than going through 50 or 100 or 20 or whatever patterns and then going into so many candle formations. This is a much easier approach, and I'll show you how easy it is. All right, so we'll just take from this onward down. Okay, so from this point. Okay, so market goes down on the biggest price wave in the last 18 waves. What do you want to do? Again, you're just looking at support and resistance. You see a resistance and you see support, right? What you want to do immediately is draw lines. All right, so I should have put that here. Support, resistance. Shit, one second. Then draw lines. All right, so here, let's draw the line. We see the support, we see the resistance. All right, this is the support, that's the resistance. What do you want to do? Draw the line. All right. Now, at support, what's going on with these 1 bar, 1 bar? This here is failure. It's also absorption. I mean, you could consider whatever. It's failure from the perspective that demand only had 1 bar. It had no follow through. Demand again had 1 bar. It had no follow through. It's absorption from the perspective that demand tried and was absorbed. Demand tried, it was absorbed. So it falls into both. Okay. I usually like to use 1 bricks as if it's only 1 bar, I like to call it failure, and if it's like a little bit, up and down movement, then I call it absorption. Something like that looks like, I'll give you an example right here. This right here is a perfect example of absorption. See this this block? This absorbing these highs and then getting ready to rally. This right here is a very good example of absorption right at resistance, and it does this type of thing. That's absorption. All right, coming back here, it goes down, goes through the support level, and ding, ding, and then what happened? It goes down. Okay. So this is a case. All right. So remember what I said so far: support, resistance, draw the line, and let's see what happens there. What's happening here? Failure, failure goes through. So this failure is pure weakness. All right, it's going through. All right, now we're watching levels and seeing what's going on at these levels. So you want to just draw the support and resistance lines and see what's going on at them. So over here, you know, as it breaks those levels, what happens? You have increased price volume spread, and what is that? That's the breakout. You see? Here, here. You have the breakout, and I mean, this is a very small trend, so it's difficult for me to, I think I need another one that's more clearer. This is also a very pathetic trend, so maybe here, I have a little bit more movement. Okay, so let's take a look. So the market is going down. Here you have failure. Why? Because you draw your line. Yeah. You have one brick that fails to have follow through, and price goes down. So here's a good example of failure. Why? Because demand failed to follow through, indicating weakness. Now you look at the next level of support and what's going on there. Here, what happens? Price increased in volume as well as the wick size. So what is that? That's your breakout. And continues, continues, continues. And again, at this high, it tries to hold one brick, one brick. What is that? Failure. When it can't hold and it's breaking the low, what is that? Breakout. Right? Pull back. Again, here, unclear what the hell this is, because maybe this is the breakout right here, the 3. Because it goes from 0 to 3. This is potential breakout. Right? It's at support, so. And it go hit this level, and then it, and why did it rally from here? Why it hit a support level? What happens at support and right below support? That's the best place to cover your shorts, right? So again, here, the same logic. Support and resistance, and what happens at those areas? Here's your resistance. You see the 5? That's your breakout. That's your breakout. Rally, pull back, test the breakout. Then it goes back to resistance. What's happening at resistance? What is this? This 3. This expansion is your breakout. Then it tests the breakout and does all this. Okay, now over here, right, it pulls back, setting up the high, goes to the high, and what happens? Up thrust. Add that resistance, up thrust, follow through, takes it all the way back down to the support level. All right. Here again is a failed breakout. This tries to break out, fails. Okay. So this is a far more easier way to read markets. Why? Because it's based on what you already know, which is what? Support and resistance. Draw the lines at the support resistance and look for those four behaviors. Breakout, failure. Failure is failure to follow through. So you have your little puny bars, 1 bar, maximum 2. So failure to follow through. 3 is absorption, and 4 is springs and upthrust. These are the 4 key behaviors that happen at support and resistance levels. Now you're probably wondering why. Why do I need this? You need this so you have an idea of whether the market's going to continue or not. Because if you have breakout at resistance levels, or you have supply failure, or you have absorption, what happens? Continuation happens. Whereas if you have an upthrust, what happens? At least a pullback all the way down to a support level. So this will give you your mental understanding about whether this trend is going to continue or not by giving you a framework for identifying continuation and as well as reversals that happen at support and resistance and because of springs and upthrusts, which probe that area. And if there's no buying at the high, or they attempt, or they run it, or whatever, then there's going to be a reversal. It can change trend, or it can just pull back to support. So this is a very easy way of reading a chart. Support and resistance, draw the lines, characterize those behaviors. The first 3 are continuation. The 4th is reversal, either reversal that may initiate trend or may initiate a significant pullback. What else? So take a look at another example. Here the market went and climaxed. When it climaxed, right? So let's start marking it up. This is the support level, right? So what is this one brick? You've been listening, failure to follow through, bang. Okay, if it's failing to follow through, it's more likely to continue down because it failed. So down, 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 here. Here, I'm not really sure what this is. Could be absorption or redistribution or whatever, but this is typically at that support level, right? You see the support level? It could also be failure, And then where's the breakout? Right there. Where's the level? Right here. All right, so breakdown. It keeps doing that. So this is very easy to read trend in this way. You can see it over here as well. When you draw the line, what's this 5? That's a breakdown. This also actually breakdown right here. Breakdown, tick tap, unclear, breakdown, breakdown, right? Until it goes the other way. That high was, this is the breakout of that high. Anyway, so the point what I'm saying is that an easy way to read markets is just to look at support and resistance levels, mark those highs and lows, and look at the behavior around them, which will follow in 4 buckets. 3 of them will most likely have some type of continuation, which is failure to follow through, right? So failure to follow through meaning, let's say at resistance, you have a red bar. It's only one red bar. And right after that, you have a green bar, green bar, green bar. That red bar was a failure to follow through on the part of supply. So it's going to continue higher. So at that resistance level, you have failure to follow through. You can have a breakout. You can have absorption. And then the fourth category, which you need to be careful about, is the spring or the upthrust. Because that will set up, usually it won't set up a trend change, but it'll be a probe or something, and it will cause some type of pullback all the way to a support level. This is what the behavior, this is what happens typically when these behaviors occur. And knowing that allows you to read the chart. All right, that's all, folks. Take care.